Welcome back, everyone. Today we're diving into a topic that's got a lot of buzz around it, gold IRAs. Specifically, we're going deep on the compliance side of things. You've been asking us to unpack this, so we're pulling out all the stops with gold IRA regulatory compliance, everything you need to know.
It's more than just knowing the rules. It's about understanding how those rules protect your investment. Think of this deep dive as your crash course in building a...
So level with me, why does the IRS care so much about what we do with our gold IRAs?
They're trying to prevent people from using these accounts as loopholes to dodge taxes or make risky investments that could backfire later on. Remember, a gold IRA is designed for long-term savings, and they want to ensure that money is there when you retire.
Makes sense. Now, the article spends a good chunk of time on the specifics of the gold itself. Can you walk us through the must-knows?
Absolutely. First and foremost, the IRS has strict standards for the gold you can hold. It can't be just any gold trinket. We're talking 99.5% pure gold in the form of bullion coins or bars. This is all about protecting you from fraud and ensuring the value of your investment.
So I can't just melt down my great-aunt's old necklace and stick it in there.
Not quite. There's a reason why those specific forms are allowed. It boils down to their recognizability and ease of valuation. Think of it this way. It needs to be the kind of gold that's easily traded and recognized in the market. Now, speaking of protecting your investment, let's talk about storage, because this is where things get interesting.
Because we can't just keep it in a shoebox under the bed, right?
Definitely not a good idea. The IRS mandates that you use an IRS-approved depository. This isn't just about security, although that's a huge part of it. It's also about ensuring the gold meets those IRS standards we talked about earlier.
So how do we go about finding a reputable depository? What should we be looking for?
That's a fantastic question, and it's a critical step in setting up your gold IRA. And that brings us to the next crucial element of gold IRA compliance, choosing the right custodian.
So we were talking about custodians before the break. The article makes it clear that choosing the right custodian is crucial. What should we be looking for?
It's not as simple as just picking someone who calls themselves a custodian. You want a company with a proven track record in handling precious metals IRAs. Think about it. You're entrusting them with a significant portion of your retirement savings.
So where do we even begin? The article mentioned the Better Business Bureau, but what else should we consider?
The BBB is a good starting point, but don't stop there. Dig deeper. Look at their fees. Are they transparent about their charges? And most importantly, read reviews from other investors. Don't be afraid to shop around and compare different custodians before making a decision.
It sounds like a bit of due diligence is in order.
Absolutely. This isn't something to rush into. Remember, once you've selected a custodian and they've acquired the gold on your behalf, you can't just store it yourself.
Right back to that whole IRS-approved depository requirement. But what about the actual ins and outs of managing the gold IRA? Is that something the custodian helps with?
To a degree, yes. They handle the storage and reporting requirements, making sure everything stays above board with the IRS. However, there are certain decisions you'll make as the account holder, and that's where understanding those regulations is key.
Like what? Give me an example.
One that often trips people up is contribution limits. The article clearly lays out the numbers for 2024. $6,000 for those under 50, with an extra $1,000 catch-up contribution for those 50 and older.
Yeah.
But where people get tripped up is when they have multiple traditional or Roth IRAs. The $6,000 limit isn't per IRA. It's for all your contributions across all of them. So let's say you max out a traditional IRA. You can't then contribute another $6,000 to your gold IRA. Knowing these details can save you some serious headaches come tax time.
And probably some hefty penalties too, right?
You got it. Remember those risks we talked about earlier? This is where they can really come into play. The article highlights some real nail-biters, like that 10% early withdrawal penalty. And get this, you could even get hit with capital gains tax if you haven't met the IRS's requirements.
Capital gains tax. I always thought that was for when you sell stocks or something.
It applies to gold, too. Here's how it works. The IRS considers any profits you make from selling your gold as taxable income. And if you haven't met the rules for holding a gold IRA, those profits could be taxed at your regular income tax rate, which is likely higher than the capital gains rate.
So if you're not careful, those tax implications could really eat into your returns.
Exactly. It's like taking one step forward and two steps back. That's why understanding these regulations isn't just about checking boxes. It's about making sure your investment is structured in a way that maximizes its potential.
It's about playing the long game, right? Speaking of which, the article mentions something about diversification within a gold IRA. Can you elaborate on that?
Absolutely. While the term gold IRA might make you think it's all about gold, you actually have options. The IRS allows you to hold other precious metals within that same IRA, like silver, platinum, and palladium.
So it's not just about diversifying your overall portfolio, it's about being strategic within the precious metals category itself.
Precisely. Each of these metals has its own unique risk and return profile. For instance, silver is often seen as more volatile than gold, but that also means it has the potential for higher returns. Platinum and palladium, on the other hand, have industrial uses which can impact their prices.
So how does someone even begin to navigate all of this? It sounds like there's a lot to consider.
Don't feel overwhelmed. Remember, knowledge is power. Start by doing your research. There are tons of resources available online, including historical price charts and market analysis. You can even find calculators to help you determine how much of each metal to hold based on your risk